Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, April 13th. Mike Boutros with you on the horn. We just got the release, guys, of core inflation from the U.S. coming in at 1.6%, topping estimates for a print of 1.5. Headline inflation coming in at 2.6 versus a 2.5 clip. So a little bit stronger than expected. No one should be surprised by this read. As we did see Fed officials already sort of preempting this, saying that we're going to get stronger inflation in the near term. Their argument is that it's transitory, and certainly that transitory comment is what everyone's going to be running with on the back of this release. That being said, good to be with you guys here this morning. Hey, Agnes, Jay, Pete, Tiffany, everyone in the room. Good to be with you guys. I wish there was more price action in play. It's been sort of a slow start to the week. We got a lot of setups that have really clean levels, but the momentum has just been stalling on so many of these. You're looking at DXY here with a tight weekly opening range. And I will go through on the menu for today. We have DXY, as always, Euro. Swissy came into support last night as expected. That actually worked out pretty well. Gold, Aussie, Sterling. That interesting setup on Sterling Oz with that cross. Nice rebound there. Dollar CAD. And just a quick note on Kiwi. Any other questions or trade setups, guys? As always, feel free to throw them on the message board at any time. Okay, so where are we on the DXY? So here's sort of where we stood. Well, I guess where we've been at with the dollar index. Here was our last review of this. We had just come off of major uptrend resistance. Again, that zone. I went over this in the webinar on daily effects, so I don't want to spend too much time on this, guys. DXY coming off big resistance, right? Big slope resistance. It's a 2011 slope line that has been so instrumental in every major DXY turn, and downslope resistance, right? So the 75% parallel there as well. Here's the pullback. Here's your first area of support. We're there now. Here's DXY in the daily chart. This suggests you have a little bit more room before you start to run into anything major, 91.80, maybe a little bit lower, but we're essentially looking for former resistance to offer support. This would also complete a simple 38.2 of the entire yearly range, and also matches up pretty nicely with those September lows that we made, the pivot break into the close of 2020. So constructive above 91.74 is the name of the game. You know, we're looking for either an exhaustion low or a recovery back above 92.46 to suggest resumption, right? Here's the intraday chart. It's been a slow grinder. The weekly open has been very neat in that you have a very tidy weekly opening range here. Again, 91.82, 91.75 would sort of be the beautiful touch for support. Bullish inval, 91.30. If you break below this, you've broken the basic uptrend for the pitchfork that we've been following off the lows. You've broken a major, you know, former swing highs, former swing lows, slope support. It's all over if 91.30 gives out. So again, at this point, low conviction. We're waiting for a break of this near-term opening range for guidance. And until that happens, I think you got to be a little bit reserved. Okay, keep some powder dry. Now, you're getting headlines today. You know, I'm watching it right here on CNBC right now. Inflation heats up. You know, you're going to get these commentary coming out, guys, of what impact, if any, that's going to have on Fed policy. I don't think it will have anything because we've already heard them say this, but, you know, the fundy guys are going to run with all kinds of stories. At the end of the day, the dollar's primed, right? It's been pumped into support, or at least it's got a little bit more to go. But the decline now, we're looking for sort of exhaustion on the downside, maybe one last stab. As far as the economic data is concerned, you know, you're pretty much spent for the entire week. I mean, later into the end of the week, you do have the RBNZ and other ancillary things this week. But for the US, you're pretty much looking for like Michigan confidence surveys later and retail sales later this week. See if we can't get any kick on that. So where does that leave? That's number one. Where does that leave Euro? No surprise, similar type of scenario, real range bound activity. For Euro, we've still been working under the assumption that we kind of want to see that stab into 1936, 1950. That was sort of the sweet spot for Euro. Here's the update last night, and here's where we are right now. So we're kind of just ranging. Beautiful spot here at the August high close, the 38.2 retracement downslope resistance. You saw some radical divergence into the high. It does have that sort of toppy feel, but the conviction of that having executed already is just not there, or having registered already. So you can still see that top side pop. Again, 1950, 1936 is where I'd want to see exhaustion, possible entries there. Broader bearish inval for the euro decline is still up at 120. 120 is such a critical zone. Here's what it looks like on the weekly charts. I mean, this is just absolutely paramount. It's a 618 extension from the ascent off the lows we made in 2017. It was a 2018 objective yearly open. Last year's August high. Beautiful spot. So again, maybe a little bit higher in the euro, but looking for resistance just higher from where we are now. Any questions on euro? Core inflation data comes out on the 16th. Keep your eye on that. So the other one from last night, I just wanted to give you a quick update on, was Swissy. Really interesting price action. That one worked out real well. Here's what Swissy looked like last night. If you go to the previous update from the last day over in March, our focus here was like, whoa, 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 whoa. We're into some pretty big resistance. Here's the daily chart. You're at upslope resistance. Here's the weekly chart, right? You're at down current upslope resistance just higher. You had that 50% retracement. So we were on the lookout for possible exhaustion here. Key support at 92.25. Yesterday, we found ourselves at 92.25. Here's what it looks like. Right, so again, just a side-by-side comparison. There's that daily chart. That ended up being the high. We spiked just higher, but ended up failing ahead of that 50%. And here's the tumble lower right into support. And we're right here right now. So again, an area of which maybe you see some downside exhaustion here on dollar Swiss. It'd be an area of which you look for that pivot on the near-term chart, as it looked yesterday, was right here. We were into this 38.2, and that's where we want to see a reaction. We're basically still looking for that same exact thing. Okay, so there's 92.24. There's that 38.2 just lower, 91.95. This is a big pivot zone in price. If we break below this, certainly you're looking for an accelerated move, like 91.50. And then the key support, you remember this, we talked about 90.90, 90.80 for like months last year. So I'm looking for a reaction here. All things held constant. Again, my humble opinion, I'm still thinking downside exhaustion as you get into the zone. It would kind of jive well with the dollar crosses that we've been looking at on the dollar pullback, finding some support here. But certainly 91.90 is going to be a level that we're going to be focused on today, and look and see how the close looks. As long as we hold that, you want to ease up on any short dollar Swiss exposure. Again, we're looking for exhaustion. One other thing I did want to note is it looks, I mean, it's only Tuesday, so I don't want to get crazy with calling this the weekly opening range, but certainly if we close today within this range, it would set up a very nice weekly opening range just above support. So again, suggestive that if we see the break materializes on a closed basis, you should see that accelerated run. Don't want to stand in front of that. So interesting stuff here on dollar Swiss coming into some support. Here's the weekly chart. There's 91.87. Lows from 2018, lows from 2020, specifically in March. Really nice pivot in price, just lower from where we are now. All right, that's dollar Swiss. So what about gold? What about gold? Good question. Here's the gold trade. Seeing a pop here, not surprising on the inflation print. Remember, gold's classic use, classic instrument has been as an inflationary hedge and a hedge against deteriorating market sentiment, or risk off, let's call it. So here's the pop higher on stronger inflation. The drop, right? We noted in the report last night, we were looking for possible areas of sort of exhaustion into this zone down here. So you're basically looking at slope support, 1717, 1708. Was that just, that's it, the exhaustion low? Don't make any assumptions unless we clear 1745. What's so important about 1745, you ask? Well, it's the objective weekly open, 1744. It's the March high close and the swing highs that we made here on the 25th and the swing highs that we made here on April 6th. False breakout, we talked about that. Here's the deterioration. This is your level. This is your level. Now, aside from all of those factors that we just noted right at 1745, what is it? Man, it's the objective weekly opening range high. So if we break out 1745 today on a closed basis, you're still looking for 1767, 1763, and that, my friends, hasn't changed. That has been sort of our key resistance zone. Major pivot, major lows, the origin of the accelerated drop back in February, upslope resistance all lined up right there. So even if we pump higher, guys, I am still very mindful, very cautious, okay, of this gold rally while below 1767. And at the end of the day, now that we've made this kind of reversal spike off the lows, we're just looking for a weekly opening range break to give us some near-term guidance on this, but levels are pretty clean. Again, bullish invalidation, 1707, that's the monthly open. Right here. Right here. Key resistance still 1676. Or 1767, excuse me. Any questions on gold? I'm flying through these today. Number 4. I suppose no surprise since not much has changed since yesterday, but I'm interested to see what happens at the weekly opening range here. I'm interested to see what happens at the weekly opening range here. And just for the record, you know, I don't want to get into this discussion, but yeah, there's going to be a lot of discussions with this inflation read, and I just don't want you guys to look too deep into it. At the end of the day, my humble opinion is we're going to see inflation start to run a little faster than the Fed wants, than the Fed is forecasting. And don't forget, Fed tools, right? The Fed's instruments, their policy is lagging. So with regards to inflation, you want to front run inflation. You don't want to wait till inflation rises, then try to tackle it on the way down because it's much harder to tamp down. So I'll just leave that the way it is there. That's just from an economic perspective, from the economic majors perspective for any of you academics out there. That's kind of the risk that the Fed runs, but hey, easy money is easy money. Okay, so that's gold, neither here nor there. Aussie. Here's what the Aussie setup looks like. So I have been talking to you guys about this setup for a while, this slope. We've kind of meandered out of it. It hasn't been too convincing. The one thing I did want to highlight is on the daily chart, man, this thing has just been stellarly clean with a range. So your opening range low actually goes all the way down this low. This is where the first of the month stretched. But if you just take the range right above the monthly open, these dots you see here, it's pretty tight coiled monthly opening range right above broader uptrend support. Here's the daily chart, right? This is pretty big. This is pretty big. Again, 75.64 is your objective yearly opening range low. Puts more emphasis on this. Take you back to the weekly charts, and I'll remind you that we are sitting at major support as well. Opening range low for the year. Basic slope support from the April low of last year. We're right there. We're looking for some clarity here. Looking for some clarity here. So momentum is deadening, 45, nothing, kind of just lateral movement, but this is still crunching. Crunch, crunch, crunch. The longer this lasts, the better the breakout. Here's what Aussie looks like on the intraday chart. So here was my apprehension with this. This did exactly what I did not want to see this thing do. You got this kind of dribble, right? Last night it looked like, oh, okay, that might be breaking. I didn't even want to highlight it because it was so not a convincing move. Woke up this morning and saw this and said, okay, fine, maybe this pitchfork still is breaking. And here we are right back in. So at this point, we've lost so much efficacy in this. We're going to ditch this slope, okay? And we're just going to focus on this consolidation above the April open. That's what we need to see break. At the end of the day, if we breach Friday's, I think this is Thursday's high of last week, it's 75.60 or 76.60, excuse me. You're basically looking for a breakout. You know, not my favorite scenario per se, but that's the risk if we topside break this slope. So same thing with Aussie. I'm sorry, again, I wish I had more conviction trades. I love jumping in here when there's so much going on, but this is just, you need to wait. You need to wait. We're at the range lows of the year. We're at uptrend support. And again, this slope is not represented in the intraday chart, but if you were to copy it, right? We're right there, man. It's getting tight. Let's look for some clarity on Aussie in the days ahead. Aussie employment data, by the way, on tap tomorrow. Expecting a print of 35,000 with unemployment. Widely expected to downtick from 5.8 to 5.7. We'll see how that read materializes. Aussie data on the employment front, you know, has been kind of steady, but we'll see. We'll see if that falls in line. Any questions on Aussie dollar? All right, that's number 5. Here's number 6, British pound. Sterling looks like this. You've made a pretty nice bounce, and yesterday I wanted to highlight the fact that we made an outside reversal off the lows. Real quick, let me just take you back. Here's sterling from the top-down approach on the weekly chart. We're at support. This Brexit gap, right? I don't really want to call it Brexit gap. I have it labeled as that, but it's just my way of identifying. It was the weekly close for the Brexit debacle, right? It took us a whole year almost to fill that uncovered gap, over a year. And it's been a decent pivot in price. You have the 786 retracement of that 2018 decline, and it's all right here nestled in this region. So we're sitting at support. Now, a couple things. You have some conflicting signals here, which is why I think sterling is one of the more interesting ones this week. Last week, you made an outside weekly reversal lower. Now, I think I went over this last week at some length, and we went into detail on Monday in the webinar about you know, outside weekly reversals when they happen at the lows and when they happen at the highs, and how the high, you know, this is a conviction outside reversal lower. There's a conviction outside reversal weekly move higher off the lows, right? And vice versa. An outside weekly reversal into the lows for me is concerning. That suggests sometimes exhaustion, right? The thrust doesn't have much more. So we're still holding 36.75, and that's my line in the sand. Below 36.75, I don't have anything till 35. So it's 175 pips to the downside before you run into those former swing highs, the high we closed from 2017, big pivot in price. It's all about this zone right here. That's on the weekly chart. Here's sterling on the daily chart. Yesterday, so you talk about conflicting signals. Yesterday, well, this actually adds to that signal, but yesterday you made an outside daily reversal higher, which would suggest that the immediate decline has a little bit of a snuff, has a little bit of a rebound, a recovery play possible in it. The last outside daily reversal you saw was right here, and that was at the highs, reverse lower. Now here's an outside daily reversal off the lows, reversing higher. Even if it does, below 38.21 is still bearish. Okay, that's the high day close for the month. Just above that is going to be slope. So our focus for the start of the week has been the weekly opening range, which is taking shape just above key support, the March lows. It's all there. Here's the intraday chart. So talk about this range right here. That's this range right here. How clean is that? We're looking for a break of 37.81 or 36.46 to be more precise on the downside, just below the Brexit gap, but that's the objective. Yearly open would open up that decline towards more key support into 35. But it's all about this zone. As I said in yesterday's piece, I'm still working with those same levels. So For us, it's either 37.81 or 38.24, which is the 618. Okay, one of these two zones, we're looking for a possible exhaustion high. Again, we need to break below 36.40 to get the last drop. Keep in mind one thing, guys. The only reason, or one of the what's the word I want to say? Evidence. One of the factors, the things that are helping me, or at least suggesting we should be looking for that last low, is just this huge confluence zone here, which would complete a proper correction. So if it's going to be two equal legs off the high, a proper correction takes us down into this 35 zone. So immediate focus is on a break this really well-defined weekly opening range in sterling. UK BOE credit condition survey come out tomorrow. They have it labeled as a high rated release, but by my part, I think the biggest release for UK is going to be next week as you get into the employment change numbers. Questions on pound Aussie. So pound, or pound dollar. So pound is right here sitting at support. Aussie is right here sitting at support. Here's pound Aussie, right? Early in the week, I wanted to highlight, well, look, we are essentially sitting at a support zone, okay? That support zone was defined by the 38.2 retracement. Here was the daily chart. I mean, let me show you the weekly chart first. Basic slope support, channel off the yearly low, nothing fancy. Daily chart had that 38.2 there too. So we were thinking, look, man, basic slope support, 38.2 the yearly range. We came off of key resistance. This is a good spot to look for a rebound. Well, it materialized pretty well. Today's the third day of rallying off that low. We already rallied nearly a full percent. And now we're looking for basically where's the exhaustion point for this recovery. Looking for a high ahead of the monthly open, which is 81.30. That's what you see here. I didn't want to tack on a retracement when I published this back on Sunday because I didn't know that we had a low in place. Now that we have this little bit of recovery, let's see if anything interesting comes up. And lo and behold, didn't make the 50 yet. Lo and behold, the 618 of that decline converges just ahead of the monthly open. Again, offering conviction, we should be looking for exhaustion ahead of this zone if sterling pound is heading lower. Now, I don't have a very strong opinion on this one on the broader trend, right? On where we're looking at as far as that's concerned. My focus was on that rebound in the start of the week. It played out pretty well. Like I said, you got a nice 1% recovery. I wouldn't necessarily be bailing on that, taking a little off the table, going break even definitely at this point or better on your stop. But the whole emphasis is the recovery remains at risk after this big resistance zone. So does this pullback hold slope support, or do we see a bigger drop and then off to the races? And that's what the focus is on with basically what we're doing right here on this rebound. Does this rebound fail ahead of the monthly open? If so, look for the downside break. If not, I mean, I'd be surprised, but you'd be on the resumptive path. Questions on pound Oz, an interesting cross, but hey, when the crosses find real clean technical levels, guys, I don't care. I always say I'll write a report on seashells if it's trading, it's got volume and the levels are clean. So a little bit of an off cross there, but levels do look clean. Okay, that's number 7, pound Aussie. Last few setups here. Dollar CAD number 8 looks like this. Here's Loonie. With just more range bound price action. I guess all I gotta do for dollar CAD is just show you guys this chart. Just goes to show you, last 4 weeks, I would say 5 weeks, it's just been churn. It's very similar to what we're seeing with Aussie, just churn. Aussie's just churning into lateral support. Dollar CAD churning into lateral resistance. Man, oh man, longer this lasts, the better the break inevitably will be. Here is the daily chart. So here's your monthly open. You can see it's just been chop sideways fest. right? Real nice range bound action. You know, guys, we complain about this when you see a 7-day stretch, 5-day stretch where you're really range bound. But for near term guys, if you're nimble enough, guys, there's plenty of opportunity within these ranges. For the swing side of things and for our purposes of being a little bit more timely, yeah, it gets frustrating when you see this lateral movement, but drill down, drill down. This has been a range that's held for quite some time. Now, at this point, you're heading into the 13th, 14th, 15th of the month. We're looking for an inevitable monthly opening range break to give this thing sort of a pop. But, you know, I still like it higher. I don't know if I'm being stubborn, just my humble opinion, guys. I still like it higher. You know, it's been pretty resilient even when the dollar's been selling off pretty strong. Dollar CAD's kind of been holding its own. Last month, you know, I was just doing some reference on this earlier in the week, and I was just looking at some of this. Last month had such a stellar monthly opening range, which broke on the 11th, and it gave us a low. Boy, did it give us a low, right? But we closed the month not that much lower. We recovered a lot of that and closed just fractionally lower. Here's the start of this month. Even if this thing tanks down into slope support again, still holding the monthly opening range lows, you'd think that with the momentum that we're seeing, the drive down, right, that we're seeing, if this thing pops through, you're going to see 27.13 pretty quick, and that's the objective yearly open. So again, very low conviction. I've just been tracking this one. Here's what I was talking about. Like I said, there's been opportunity on the swings here, back and forth, just range, range, range. This is what we had highlighted. It's funny that we're actually testing that now. Here's dollar CAD as it looked into the Sunday open. I was looking for a drive to get some sort of entry near slope support, but we never got it. Here's the 2018 open. Here's confluence resistance. I think I noted 2620. Here's 2620. So what does that mean now? Well, we just spent a couple of minutes talking about why this is range bound, which means if you're holding longs, clean your act up. Very simple. We got to stay nimble while in these ranges. Now, if the break materializes, or if you want to leave a lot on the table, a lot, not a lot, like a single lot, with a break-even stop, sure. But until these range conditions break, we don't want to be positioning, okay, as it were, for the larger move. It's just too early. We haven't got any conviction for any catalyst or any kick break. So watch the contraction. Watch the contraction. Now, I took a slope off this, and I paralleled it off the low here, because yesterday, as that parallel came, it converged on this key region, which I'm watching anyway. I don't want you to focus on this lower sort of slope here. If anything, this might be sort of a consolidation structure, right? You see a series of lower highs, and you see a series of higher lows, right? So I'd rather be looking at this more in the sense of sort of a tightening range, consolidation range, necessarily than a parallel to the downside. But levels are pretty clean. We need a break above 26.47. It's the objective monthly opening range highs to get the resumption. 26.85, 27.13. Like I said, that's the yearly open. Would love to see a tap of there. Key support at this point is 25.27, still the April 2018 low. We opened just below that, so the weekly open comes in at 25.23, and both of those levels converge now, sort of on that lower parallel. So we're still waiting for some of these godforsaken ranges to break, but I think we'll get them soon. All right, last but not least, I should have probably covered this after the Aussie, but here's New Zealand dollar. You know, this thing has kind of been marching to its own drum too, sideways, sideways, sideways. The only thing that I found sort of remarkable is that we've continued to hold that descending channel on the daily chart, like whoa. So here's what it looks like. I mean, it's literally been 3 days, 4 days riding that as resistance. Monthly open support comes in at 69.83. Key support, we just scratched the tip of it, the upper end of that zone last month and into the opening range of this month. So Kiwi, it's either a one last rip and failure into this zone, or a break back below the monthly open to get us back on track into the 69 handle. This is still pretty big. So Range, range, range until we get some clarity here. Keep in mind, you do have New Zealand interest rate decision on tap tonight. No change expected at 0.25% as far as rates is concerned. So we'll see what the commentary yields, but simple weekly opening range, nothing more, nothing less. Okay, that's everything I have on my list. Do let me know if you guys have any questions or trade setups you want to review. Marcin, I think you threw out something yesterday in the webinar I didn't get to, so let me know if you have any setups you want to review there. Listen, this death of volatility will end, okay? It's not going to last forever. This is where you want to just be tidying up your charts, have everything sort of lined up so that when we get that kick in volatility, we're sort of ready to go. Okay, so Marcin, Cat Swiss, Sterling, Kiwi, and Swiss Yen. Okay. All of your requests are always a tongue twister, I'll tell you that much. So here's CAD Swiss. Is that the first one? Okay. So here's a daily chart. Now let's stick with the original. All right, so I love where it turned. I love how it turned. Really strong divergence there. Price action, higher high, higher high, higher high, lower high, lower high, lower high. Beautiful support trigger there that broke, gave us the spill. You're trying to assess here the magnitude of the decline. Now, okay, give me a couple more seconds here. Hold on. So I want to take a retracement off of the actual swing low from last year, but I'm also, I'm a big advocate of retracements of the operative range. So basically, in a time value would be this year's actual range. And that gives you a 38.2 just lower. So let's do this. Okay. So the big zone, okay, over the next couple of days is basically like in just below the 73 handle. Marcin says you're welcome. Are you talking about the tongue twisters? Hey, you're more than welcome, man. Yeah, thanks. Here's the slope of influence I'd be paying attention to. A little bit lower. Momentum doesn't have me concerned. Um, just for the sake of this presentation, just to give you the levels, I'm going to zoom into this chart to give you the levels. I just want to see what this looks like on the near term. So you look for some guidance on a formation. I don't see anything here that would give us a decent fork per se. That actually does hold. Okay. Yeah, that matches up pretty nice. So the former swing high that we had that March on the opening range high before that break gives you resistance basically into the 74 handle, 74.10. Watch this zone here, Marchin. Okay, if you're holding shorts, this is where you're gonna run into some trouble. If we close sub 72.90, 72.80, I think you've marked a full on reversal off uptrend resistance. So I think it'd be a much more convincing pullback. But at this point, on the decline from the high, I mean, this has got to be at least 1% at this point, right? Yeah, this is only 3% at this point. You want to look for this support zone. You want to look at the support zone. 30 pips of support, you're into it right now. All right. So Marcin, hope that helps on CAD Swiss. Kiwi, Sterling Key looks like this. Sterling Key, I think I have a chart of that. This is the daily. Okay, that's your monthly open. Excuse me. And here's your high day close. Two levels of which I'd want to see hold resistance. The one of which is on the upper end of one level that we're watching already at that 1618. That's like 9640, 9650. Bearish invalidation would be at the monthly opens. That's like 9720. And I would want to see. Bear with me one sec with this. It's too early, but I bet you the 100 will be pretty darn close to right that 100. Okay, so everything looks pretty clean. So look, this is just some levels I'd be considering. This is still the big zone of support. You can see that also converges on the daily chart with basic slope support off the yearly low. So you're looking at like 9250s. Initial support 9360, bearish inval for the near-term decline 9640. Bigger zones, but hey, Sterling crosses. Got to respect it. Near-term support, at least on the initial, look for a break of the weekly open. All right, Marcin, feel free to take a snapshot of that for future reference. Interesting weekly opening range setting up here with the decline of uptrend resistance. Pretty nice one. I like this. Not too crazy about going long Kiwi, which is what you're doing with the Sterling Key drop, but if the Sterling drop materializes as a more of a Sterling offset move, then this one might be a really nice move down towards 9360 here. Last but not least, my friend, is Swiss yen. I wonder what makes you look at these pairs. Interesting. This thing is a mess, but if you put a pistol to my head, I'd be bearish near term. There's not much merit to this slope, but what the heck is that? So essentially, save a couple of pips down here, you've been making a larger and larger range for the last 3 days. I don't mess with these things. For me, that looks toppy. That outside reversal candle you made on the 4-hour slope here overnight does look to me like an exhaustion. So on an initial touch on something like this, I'd say I'd still be looking for the pullback. But man, that is an ugly, ugly setup. Divergence all into the high. $118.60s on this stroke right here. Your stop would be above the slope. It would need to fail pretty darn close to where we are now. But low conviction on that one, Marcin. Low conviction. Oh, what a horrible pair. But that's all I got for you on that one, Marcin. Any other questions or trade setups, guys? Feel free. Otherwise, we'll go ahead and wrap it up here. Look, the data's out for the day. Essentially, this core inflation data is what everyone was talking about, and that's what we've gotten all the commentary from the fundy guys, quote unquote. I do air quotes every time I say that. Over the last couple of days. So the discussions will ensue on whether inflation is transitory or rampant or whatever. Keep your eye on the gold trade. That's going to be the tell. Watch the opening range highs. Keep your eye on the DXY trade. Keep your eye on the dollar CAD setup, which again just looks like it actually failed on that upper parallel, keeping that range in play. Guys, stay nimble until we get these range breaks. Best of luck trading. You're more than welcome, Marcin. My pleasure, man. Just picking on you. But you're more than welcome. Thanks to you, Jay, Marcin, Pete, Steve, Stephanie, Tiffany, Agnes. Have a great day, guys. I will see you on Thursday morning. Cheers.